Credit cards aren't free money. They might look like a simple piece of plastic, but they come with a lot of responsibility. In reality, a credit card is a short-term loan from a bank or financial institution. When you use it, you're borrowing money that isn't yours, with the promise to pay it back later. You use the bank's money to buy things now, whether it's groceries, clothes, or even booking a trip, but you must pay it back, usually within a month if you want to avoid extra charges. Unlike cash, if your card is lost or stolen, you can quickly cancel it and often get your money back thanks to strong consumer protections and fraud monitoring. Credit cards are different from debit cards. Debit cards use your own money from your bank account, while credit cards let you spend the bank's money, up to a certain limit. This makes credit cards incredibly convenient for emergencies or big purchases, but also risky if you're not careful about your spending habits. The key is to only spend what you can afford to pay back when the bill arrives. If you overspend, you could end up in debt and pay high interest rates. Credit cards are designed to make banks money through interest and fees, especially if you don't pay your balance in full each month. Always read the fine print and know your interest rate. Treat your card with respect. It's not a magic money tree, but a tool that can help or hurt your finances depending on how you use it. Use the benefits, like convenience, rewards, and protection, but always be aware of the potential traps, such as overspending or missing payments. Rule 1. Never buy with a credit card unless you know you can pay it off in full. Responsible use builds your credit score and keeps your finances healthy. Let's break down how the credit card buying and paying back cycle really works. When you make a purchase with your credit card, whether it's a coffee, groceries, or something online, you're not actually spending your own money right away. Instead, the bank steps in and pays the merchant on your behalf. This means you instantly owe the bank for that purchase, and your credit card balance increases by the amount you spent. Throughout the month, every time you use your card, those purchases are tracked and added up. This period is called your billing cycle, and it usually lasts about 30 days. At the end of each billing cycle, you receive a statement. This document lists all your purchases, the total amount you owe, and the all-important due date for payment. If you pay the full balance by the due date, you won't pay any interest at all. It's like getting a short-term, interest-free loan from the bank. An amazing benefit if you use it wisely. To make sure you never miss a payment, consider setting up a direct debit to pay your full balance automatically each month. This is the safest and most reliable way to avoid late fees and interest. But if you pay less than the full amount, the unpaid balance carries over to the next month. The bank then starts charging you interest on that leftover amount, and the costs can add up fast. Making only the minimum payment keeps your account active and avoids penalties, but it's a dangerous habit. Most of your payment goes toward interest, not reducing your debt. Over time, interest charges can snowball, turning what started as a small balance into a much bigger financial problem. It's easy to lose track and end up owing far more than you planned. That's why it's so important to always aim to pay your full balance every month. This keeps you in control and saves you money. Remember, use your credit card for convenience, rewards, and protection, not as a way to spend money you don't have. That's the golden rule for staying financially healthy with credit cards. 3 terms you must know: credit limit, minimum payment, and interest. Your credit limit is the max you can borrow. Never treat it as a target. The minimum payment is a small percentage of your balance. Paying only this keeps you in debt longer. Interest, or APR, is the real cost, often 20% or more. If you don't pay in full, interest is added monthly, and your debt grows fast. Compound interest means you pay interest on interest, making it hard to escape debt. Always know your APR and avoid paying it by clearing your balance. Don't let a small minimum payment fool you. It's expensive in the long run. Only paying the minimum on your credit card each month is a financial trap that many people fall into without realizing the long-term consequences. While it might seem manageable in the short term, sticking to minimum payments can stretch your debt out for years, sometimes even decades, and you could end up paying double or more than what you originally borrowed just in interest alone. The bank profits from your ongoing debt, collecting interest month after month, while you remain stuck in a cycle that's hard to break. It's a system designed to benefit lenders, not you. By paying more than the minimum, even a little extra each month, you can dramatically reduce the time it takes to pay off your balance and save hundreds or even thousands in interest. Always aim to pay as much as you can above the minimum to escape the debt cycle and take control of your finances. Your credit score is like your financial reputation. It's a number that lenders use to decide if they'll trust you with loans, credit cards, or even renting an apartment. Using your credit card responsibly, by paying your bill in full and on time every month, helps you build a strong credit history and shows lenders you can be trusted. On the other hand, missed payments, going over your credit limit, or carrying high balances can seriously damage your score, making it harder and more expensive to borrow money in the future. A poor credit score can mean higher interest rates, bigger deposits, or even being denied loans and opportunities altogether. Keep your credit healthy by always paying on time, keeping your balances low, and monitoring your credit report regularly for errors. Good credit opens doors to better financial opportunities, while bad credit can close them, limiting your choices and costing you more in the long run. Protect your credit score. It's not just a number, it's your financial future and your key to achieving your goals. Top tips: always pay your balance in full. Set up a direct debit so you never forget. Never use your credit card for cash withdrawals. They're expensive and hurt your credit. Keep your credit utilization low, ideally below 30% of your limit. High utilization makes lenders nervous, even if you pay in full. You don't need to carry a balance or pay interest to build credit. Just use the card regularly and pay it off. Use your card for small, manageable purchases and pay on time. Remember, a credit card is a tool, not free money. Use it wisely, avoid debt, and it'll help, not hurt you. Stay smart, and your credit card will be your financial friend.